Today. Hopefully you guys are doing well, feeling good, ready to do some stuff. Good morning, Victor. Good to see you. Guys, we're going to do what we do. Just going to keep it simple today. Going to keep it focused. Going to keep it basic. First, we're going to check news. Today is Tuesday, September 30th. Guys, everybody set a timer, 10 a.m. Jolt's job openings is high impact, has a very good chance of making the market spike, jump, bump, do something, anything other than what our patterns are teaching us. 11 a.m., President Trump speaks, can always move the market depending on what he says. First stop every morning is the forexfactory.com/calendar, just to make sure I don't step in front of a freight train of emotion, guys. And then everything we do today, everything we did yesterday, and everything we do tomorrow is dedicated to teaching you guys to read your indicators, to be able to look at your charts, to recognize a couple basic advantages, and then to put those advantages into play. The basis for everything we do is momentum and path. Good morning, Mike. Government shutdown looming. Man, Victor, the government shutdown is looming every 6 months. Some crybaby says, we're not going to show up to work, and then some other crybaby says, but I'm going to have to, and man, I don't even pay attention to that anymore. And let's be honest, would we really notice if the government shut down? Don't get me started. Guys, momentum and path. Momentum and path. Memorize those phrases. Momentum and path. Those two words. Guys, that's the basis of everything that I teach in this room. Whether you are on NinjaTrader or whether you are on TradingView, you will always identify momentum and path before you look for an entry. And that's the basis of what we do. This particular one, momentum, path, entry, guys, that's a high probability trend trade on NinjaTrader. It's the same reason you'll get into a trade on TradingView. And my goal for you is that you just learn to read your indicators, that you just start to recognize a couple advantages, that you get to a point to where you look at your chart and you say, hey, I have momentum. My path is clear. Let me go define an entry, guys. And when you do that, what you've done is you have identified the highest probability trend trade you could ever take. And it all stems from a chart read, not from a desire for wins or a love of money. When you learn to read your indicators, guys, you're going to understand concepts like where the market is likely to continue. You're going to be able to point out where the market is likely to go. You're going to understand where the market is likely to stop, and you're going to take these ideas, good morning, Cav, and you're going to incorporate them so that you can be consistent in all that you do. What you will find is that 90% of your day is doing nothing. If there was one thing that I think every brand new trader should learn, is that trading well is boring. Trading well is not exciting. Being a great trader has nothing to do with being in the market all the time. It has everything to do with being in the market at the right time, guys. So that's why I teach this foundation. We talk about these three rules. We talk about high probability trades. And we do it in the path of least resistance, the fewest moving parts to get you where you want to be. This is NinjaTrader's recipe for the high probability trend trade, guys. And I say recipe because when you deviate from a recipe, you tend to not get the same results, right? If you swap out baking powder for soda, you don't get the same results. If you use 2 cups of flour instead of 4 cups of flour, your cake doesn't work the same, guys. So this is a recipe for success for brand new users. This is a trade, a high probability trend trade. We're starting on NinjaTrader this morning. This is a trade that you can study, that you can test, that you can back test historically, that you can prove wins more than it loses, guys. And this particular trade is a trade that typically wins 70 to 80% of the time. And it's only 3 rules. And when each rule is met, it creates an advantage. And again, I'm going to say it, momentum and path. Once you can recognize strong triggers on NinjaTrader, guys, once you can understand whether or not there's something in the way that could stop the market, we call those termination conditions. You have the keys to the kingdom, the golden goose, whatever you want to call it. You have everything that you need to be successful, and to create your own plan outside of the very basic plan. Your entry area, rule number 3, guys, this is just a trend trade entry. This is one of so many different ways you can use this software. But here's the caveat. If you learn this very basic trade, if you learn these 3 simple advantages, what happens is you begin to see the other trades. You begin to see the other entries, the other opportunities, the more aggressive management lessons, guys. And this very basic approach opens doors. Andy V, timber industry did a study in the 70s. The largest user of paper is the government. And then if that customer was eliminated, it would be the most beneficial for the industry. Isn't that funny? Guys, these 3 rules come to be on only 2 charts. There's a big chart and a small chart. I'm going to suggest that you learn where the rules are met, so that you don't let a small chart talk you out of greatness, guys. We use a large chart first. This is the biggest chart on the workspace. It's a very slow chart. It's a broad stroke of a brush. And this large chart will define direction, letting you know which way to look for rules to be met. It will define momentum through rule number 1, making sure that you have that advantage. And it will define your path, making sure that there are no termination conditions, no areas likely to stop the market. That's going to give you room to targets. And all of that greatness happens inside of 1 bar. That's it. This 1 bar defines direction, momentum, and areas. When rules 1 and 2 are met, when they're true, when you have momentum, when your path is clear, you'll come to a smaller, faster chart. This refines that big picture, guys. And inside of that 1 bar that gives you 2/3 of your advantages, there's about 30 bars. There's typically a pullback, a bounce, and a continuation. This is your entry. And it's this refinement process that makes the entry so accurate and reduces risk and increases profit potential. Using 2 charts because you're not in charge. Whether it's the big chart or the little chart, guys, the market doesn't know you exist. They don't care about your position. Your large chart is the large crowd. They win more than they lose. Your small chart is the small crowd. They lose more than they win. Guys, we use your small crowd to define entries, and they lose typically 70 to 80% of the time when the large crowd is showing you momentum and clear path. And we're just going to pinpoint their failure. My day has been the same forever. We're going to get through it, guys. If you have questions or confusion, I need you to raise your hand. But we're going to get through it. We're going to get to the live market. We haven't been in the live market as much. There's been a lot of amazing pictures posted, which I love. And I'm very happy to avoid the live market to chart read. But there's a lot of benefits that come from looking at charts and talking through the concepts. So what we're going to do this morning is we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. I love the phrase okay to trade. When is it okay for me to trade? Guys, it's okay for me to trade when I have the advantages that I need to identify a higher medium probability trade. It's okay for me to trade when the rules are met, because my rules can be proven to win more than they lose. And that's an edge. That's an advantage, guys. Trading is about probabilities. Knowing that every 10 trades you take, you're likely to win 7 or 8, you're likely to lose 2 or 3, and you'll never know. You'll never know if it's going to be a win or a loss, so it's all about the consistency of the method. So we're going to learn the method, the rules for when it's okay to trade. You guys are going to simulate, you're going to practice, you're going to make mistakes, you're going to break things. But if you really want to fix the problems, if you want to get to where you need to be the fastest, guys, post in my room. Post a picture, tell me what you saw, ask for help, guys. I'll give you all the help I can give you. The goal is that you're practicing the correct rules, not getting lucky, because luck tends to run out the second you go live. We're going to keep it very simple, guys. I'm not going to repost them, but at the top of the chat box, guys, I've got plans for both systems. I've got tracking sheets for both systems. I've got a checklist for NinjaTrader. I've got the simple doc. I've got chart reading. Guys, I've got everything you could ever need to be successful with this software already dropped into the room. You'll get to where you want to be fastest if you keep it simple, if you keep it focused. If you focus on learning momentum and path, learning how to read your large chart so that you can go define entries, and you've got to know what the looks are, guys. It's just a pattern. It's all it is. On NinjaTrader, it's just a pattern. It's momentum, it's path, it's entry. On TradingView, it's defining the momentum, its path, its entry. Three things, two charts. All you need to be successful. Learn the looks. Know what your pattern looks like so that you can commit to it. The most successful traders I've ever worked with, all of their trades look the same. Their entries follow a very rigid set of rules. Their exits follow a very rigid set of rules. They do everything in their power to remove the emotion from their trading, to remove the opinion from their trading, to remove the hope from their trading. And it's very mechanical and it's unbelievably boring, but it can be just fantastically profitable if you learn the system. So we're going to talk about NinjaTrader indicators, guys. These are the areas that you'll see on both charts. Pretty much horizontal lines that run across the chart, guys. There are divergence highs and divergence lows. These divergences mean there was a loss of momentum. That's it. Every time you see a magenta line or a cyan line, there was a loss of momentum at that pivot. You'll see Fibonacci resistance, Fibonacci support, yellow one-to-ones. Areas that can behave as resistance in an uptrend: divergence highs, resistance, and one-to-ones. Areas that can behave as support in a downtrend: divergence lows, Fibonacci support, yellow one-to-ones. So anytime I say price reaches resistance, it could be any. They are interchangeable and synonymous. Both charts will have triggers. There are small triggers that are a fast-moving average. There are large triggers. Those are a slow-moving average. No matter what time frame or platform you're looking at, there are small and there are large. On NinjaTrader, when they're green, they're going up. When they're red, they're going down. The same is true with the background. When it's green, the market's going up. When it's red, the market's going down. It's just going with the flow, guys. You're going to use trigger lines to define momentum and rule number 1. You're going to use trigger lines to define termination conditions and rule number 2. You're going to use large trigger lines to define entry for rule number 3. Guys, triggers will work their way into everything that you do, and all you need to know is that these are small and these are large. So now we're going to break it down individually. Guys, if I'm going too fast, tell me to slow down. Rule number 1 says the large chart, the big chart, the slow chart, the large crowd, however you want to say it, they have to have strong trigger lines, because strong trigger lines create the advantage of momentum. In an uptrend, when the background is green, small and large triggers must also be green. In a downtrend, when the background is red, small and large triggers must also be red. Unless you're colorblind, that's a pretty good cheat code. If you are colorblind, let me know. I'll give you the colorblind cheat code. Guys, strong triggers is nothing more than a separation. In an uptrend, the small triggers are above the large triggers. They're breaking away. There's space between the two. It looks like scissors that are open. Guys, that is strong triggers. In a downtrend, smalls have broken below the large. The large are wide. The space is there, like open scissors. That is strong triggers. When you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum. You're going to see it posted on NinjaTrader charts all day long. You're starting to understand TV better, Caleb? I like it. Strong triggers push a market. Strong triggers are what we look for to break key areas, guys. Strong triggers are when we're buying and selling Fibonacci support and resistance. Strong triggers are hard to stop, and they're rule number 1 for a reason. And guys, that is the extent of the lesson. It's just one look. Separation between small and large. When the separation goes away, it's weak triggers. So brand new users, you either have strong triggers or you have weak triggers. You have rule number 1 met or rule number 1 is not met. You have odds are favorable for the market to continue, or you have anything can happen up or down. And guys, if you love language the way I love language, there's no part of me that wants to embrace a look that says anything can happen up or down, that's identified as weak, when the option is there for me to wait for strength, to wait for odds favorable. And guys, that sets the tone. Strong triggers are the only reason that I go to rule number 2. And rule number 2 is going to give me room to profit targets. It's going to make sure that there's nothing in the way, no Fibonacci areas that could reverse a market. Guys, we're going to call that a clear path. But before we look at the clear path, are there any questions about momentum? It is a one look, it is a large chart look, and it is separation between the smalls and large with space between. Guys, that is strong triggers right there. Pretty cool, right? Doesn't need Fibonacci, doesn't even need price bars. It just needs a separation between the small and large. Once I have it, we're going to look for those horizontal lines on a large chart. Areas on a large chart are where the large crowd make decisions, guys. Areas on the large chart show potential highs and lows. They show where trades are being entered and exited. Guys, they show where fights are most likely to happen. And our path of least resistance, our highest chance of success, comes from not trading directly into a termination condition. When I talk about 90% of your day is doing nothing, termination conditions are going to be the biggest reason that you sit on your hands. And they're easy to identify. Price reaches an area. So when I say price reaches an area, I'll live mark it. Price made it to that Fibonacci area. Does everybody see it? The price bars went up and they arrived. And once they arrive, I don't care what price is doing anymore. I'm going to go to my trigger lines to tell me whether or not it's a termination, has the potential, or if the area is cleared. So when price reaches the area, if none of the trigger lines have made it through, if both small and both large remain below resistance, if both small and both large remain above support, we have the clinical definition of a termination condition, an area that could stop the market, an area that could create an untradeable bounce, an area that could reverse the market. I'll do a quick reboot, Miss Kathy. Be right back, guys. All right, I'm back. Is that better? Hopefully that's better. Let me get my screen up. Boom, 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 boom. Sound effects make everything better. I don't know if you guys knew that. Guys, when price reaches an area and none of the triggers break, just assume that the area will hold. Assume that it's going to create a bounce that you can't survive. Assume that it may even reverse the market. And just sit on your hands. Rule number 2 says absolutely no trades into that area. If 2 of your trigger lines get above the area, that's both small triggers. You can say to yourself, hey, this area has the potential to break. But guys, that's not your best look. I would say 0 triggers, 2 triggers. This is your man. Let me sit on my hands. Let me embrace my 90%. The odds are not favorable for my success. Let me hold off and wait until at least 3 trigger lines make it through the area. Now we're looking at a market with the potential for a breakout. Now we're looking at a market that has a better chance of getting above that area of resistance, creating opportunity. The second trade on the plan that I give you guys is based off of this look. It's what we call a medium probability trade. And a medium probability trade means that most of your indicators line up. However, a small issue exists. Your issue will be that the path is not clear, but there's still a lot of opportunity. This will probably be the majority of your trades. But when 4 trigger lines get through that area, when they get above resistance, below support, guys, that's when an area is considered broken. And when an area is considered broken, guys, your path is clear, and your path remains clear until you reach the next line. I want to find one quick picture that I want to share with you guys. Once it breaks, it's broken. Once it gets through, it's done, it's through. But I want to share this picture. There will be times when your path is not clear because the areas are stacked. There will be times where you'll begin to get frustrated because you haven't been in the market. There will be times where you'll feel like the market is never going to give you anything, and you're upset, and you're going to be tempted to fabricate. Guys, this is 90% of your day. Be patient. The futures markets trade an average of $220 billion hourly. You don't need every move. Have your rules met. Focus on the best moves. And a lot of people don't realize this coming into day trading, because all of you guys have dollar signs in your eyes and you're ready to make $1,000,000 every day. But guys, it takes $400 a day. That's it. $400 a day to create a six-figure income. And the easiest trades that you will ever take, the easiest trades that you will ever have, guys, are going to be trades where you have the advantage of momentum, where there's nothing in the way, and you're literally going to be able to buy or sell a pullback in an area inside of triggers. Guys, these tails on a large chart, these wicks, whatever you want to call them, some people call them shadows, this is the small chart movement. This is the small chart fluctuation. Guys, you're going to be able to pinpoint right where that tail is most likely to form. And you'll notice that during that tail, the momentum never goes away. During that tail, the clear path remains clear. Guys, this is where stress-free trading comes from. Having an advantage, having an edge, having momentum, and having the path clear so that you can go to find your entry. Are there any questions about clear path? When price reaches areas, all we have to do is count triggers, guys. 2 triggers is potential, not the best look. There may have been an opportunity. 3 triggers above fibs is better, but we've also got 1-to-1s with only 2 triggers, guys. There will be times when your areas are stacked. Look at how the market stopped at Fibonacci support, retested those 1-to-1s, and that's where your uptrend started. Pretty crazy, right? Somebody knew about these numbers. 3 triggers through, it didn't break. Big untradeable bounce. Weak triggers, it didn't continue down, it retraced. 2 triggers through a divergence low, untradeable. 2 triggers through a yellow 1-to-1, didn't make it. Weakness, retracement. Guys, everything that you do can be boiled down to momentum and path. Every chart that you see in this room can probably be boiled down to momentum and path. So, learn momentum and path. Are there any questions about these 2 concepts? These are the 2 that bring happiness to the village, guys. These are the 2 that set you up to go look for the entry, to go to the smaller chart, to use that refinement chart. And guys, the entry methodology is so stinking accurate. You're going to use a limit order. You will literally wait for the market to come to you, and you're going to buy or sell a pullback. And just so you guys know what a pullback is, a pullback is defined as a small retracement counter to the underlying trend. So on your small chart, a pullback is maybe 15 or 20 red bars when the large chart is screaming up, or maybe 15 to 20 green bars when the large chart is screaming down. This little retracement gets us to our entry. We're going to use a limit order to buy or sell a pullback at an area, at a fib, at a mid band, at a yellow 1-to-1, because the same way on your large chart those areas can stop a trend, on your small chart they're the rock solid foundation that we need to create a bounce in the direction of the trend. But the most important verbiage in the entry phrase, I'm going to buy or sell a pullback at an area inside of triggers, guys. And triggers, just moving averages, that's all they are. Price returns to moving averages, which means that you can define right where that retracement is most likely to go using large and synthetic triggers. It's just large triggers from both charts. You can define right where the market is most likely to bounce and continue in the direction of the trend with the areas inside of triggers. And guys, this is somebody's real trade. Entered 4 right at a mid band inside of triggers, made money all the way up, guys. And this is what we're going to do. When the large chart has momentum, when the large chart has a clear path, We're done with the large chart. We're going to the small chart, and we're going to buy or sell a pullback at an area inside of triggers. So in order to get a pullback on the small chart, you need a reversal bar, a down bar, when everything on the large chart says up. At the time of the reversal bar, or even before, once you learn the lessons, at the time of the reversal bar, you will define where the retracement is most likely to occur using large and synthetic. The tighter they are one on top of each other, the tighter the zone, the more accurate the entry. And then you're going to look inside of that zone, guys. You're going to say, what's in there? I need a fib, I need a mid-band, I need a yellow 1-to-1, because areas create bounces. If these price bars are a tennis ball, the areas are the brick wall that we're hoping sends it the other direction. Sometimes you have multiple areas, and you have a mid-band up top, and you have a yellow 1-to-1 down below. And which one do I pick, right? It creates a window. Guys, always entering at the area closest to the reversal bar. Always entering at the highest point of support for a long trade. Because if you remember, your large chart will be absolutely railing to the upside. Your large chart will have nothing in the way. We're going to jump in with a limit order, waiting for the market to come to us. And that's your high probability trend trade long, guys. And my goodness, when you have momentum, when you have path, this is a pattern that defines entry. And guys, this is a trade that typically works 70 to 80% of the time. Any lines beyond the retracement zone, any areas beyond the retracement, beyond that window, guys, there are no entries from the wrong side of the triggers, below the triggers for a long trade. Once you get beyond the triggers, once the market has pushed beyond retracement zones, beyond areas inside of the retracement zone, guys, the advantage of rule number 3 is no longer in play. You no longer have an edge. You no longer have what you need to feel confident. This is where the market should not go if this is going to be a winner. In a downtrend, with momentum, with clear path, the entry pattern starts with a reversal bar. Reversal bar is not your entry, guys. The reversal bar begins the pullback. Where's the pullback most likely to go? Somewhere from the bottom to the top of the triggers, guys. That's your retracement zone. Anywhere in there, from bottom to top. Where's it most likely to bounce and continue with the large chart? At the area inside of triggers, guys. Write it down. Pull back to an area inside of triggers. Inside is the most important word of that phrase. Because once you get beyond the triggers, once you're where the market shouldn't go, once you're on the wrong side of the triggers, however you want to say it, you don't know if, when, or where that market is going to continue down. Rule number 3 is no longer in play. You no longer have the rules stacked in your favor. You no longer have loaded dice, guys. Your edge is gone. And we're going to use that concept for initial stop placement. In the plan that I gave you in the room, guys, it covers management for the highest probability trend trade, and it tells you that your initial stops are to be placed where the market should not go, generally 4 to 5 ticks above the trigger lines. Because if your small crowd can push through everything that is most likely to stop them, guys, we don't want to be in that trade. And this is acceptable losses. This is the cost of doing business. And because when I take this entry with all those advantages, more often than not, this is my outcome. And when I take this entry with all of those advantages, more often than not, this is my outcome. So as a brand new user, what I really want you to focus on is not the money that you want to make. Focus on the process that's most likely to create the money that you want to make. And that process is first identifying momentum, recognizing that you have room to trouble and 3 or 4 triggers above the previous trouble. And guys, when you have these rules met, does everybody see my marker? The market is trading all the way up here at 97.05. And your fear of missing out is full tilt boogie punching you in the ribs, telling you to just jump into the market. That's where your reversal bar comes from, guys. That's where your entry pattern typically starts, because when they clear an area, sellers are going to test the water to see what the buyers are up to. Profits are going to be taken, guys. And the reversal bar starts the pullback. And when you get in at the area inside of triggers, guys, what you're doing is you're pinpointing and predicting and identifying exactly where that tail is most likely to form. We're not waiting for the tail. We're doing the pullback at the area inside of triggers. But from this entry, that small amount of room quadruples, turns into about $320 worth of profit where it was 80 from the top of the bar. And guys, this is your pattern. So you can go back and you can study this pattern. You can open up a large chart and you can say, okay, when I had momentum, this particular tail, this particular tail hadn't reached yellow 1-to-1s yet, and it had 2 through and all the momentum, and I'm just going to circle it and we're going to see what it looks like. And I'm going to back up and I'm going to look for momentum and path, and then I'm going to circle a tail if I get one. That looks like a pretty good example right there. We'll see what it looks like. And all I'm doing is saying, hey, I need strong triggers. I need a clear path. I need the potential to break. Let me circle a tail. Guys, this is the first step in studying this methodology. The second step is opening up your small chart and saying, all right, what did that tail look like? Well, that first tail pulled right back, but I didn't have any areas inside of triggers. My mid-band was below the triggers, which means that my mid-band wasn't in the retracement zone, which means that my rule number 3 was not met. Does that make sense, everybody? And this would be a no trade, even though the market went up. Because we're going to be very black and white as new users. And we back up to the next one. There it is. Once again, wrong side of the triggers. Maybe not your trade as a brand new user, because you're looking for the best of the best. You're learning these advantages. And then we get it when it's perfect momentum, when there's absolutely nothing in the way. And guys, there's your pattern. It pulls right back to a mid-band inside of triggers. So the one time we had both momentum and path is the first time that the entry was perfect, that the opportunity to make a lot of money was there. And guys, that's your high probability trend trade. It takes 2 charts. Large chart will define momentum. We have none because the colors match. Large chart will define path. It only had the potential, and sure enough, that potential went away. And you will define entry, but guys, if you don't have momentum and path, this area inside of triggers should be off of your radar, because that's exactly what's more likely to happen. And guys, these are the losers right here. When I don't have momentum and path, but your opinion, your fear of missing out gets you into this trade, these are the losses that kill accounts. There's a lot of patience. That's an avoidable loss, guys. And avoidable losses are just detrimental to success. Are there any questions about the high probability trend trade? We'll look at the ES real quick. ES is almost the same look, isn't it? It had momentum, but then the triggers turned, and only 2 triggers got through the fib. And guys, look at what's happening over here. That's that fight. That's that small crowd fight. The large chart hasn't changed a lot, but it looks like a seismograph on the small chart. This is decisions being made at key areas, guys. That's avoidable. Looking to see if we have any tails with a clear path. Here we go. Odds favorable. Room to trouble. Cleared the previous. It's a perfect look. What's it look like on a small chart? I'll be damned. There's a pullback right to an area, right inside of triggers. And guys, it went down right to the next Fibonacci area. Does everybody see it? If you're one of my NinjaTrader users, guys, this is your pattern. And it looks the same every time you take this trade. And the stop goes in the same place every time you take this trade. Profits can be taken at key Fibonacci areas every time you take this trade. That's NinjaTrader, guys. Go study it, learn it, ask a million questions, post in the room. TradingView is the other platform. TradingView is the platform that we use with Nexgen Pro Trader funding. And just in case you didn't get your email yesterday, guys, before we get into this one, um, you guys talked and we listened. Um, as of last night, 1 day to pass. Nexgen Pro Trader funding. Um, that's it. 1 day. You got the chops. Knock it out. Pass it. No daily loss limits, guys. It's end of day. That's it. From highest equity. New users, still, if you're new in my room, you can get a free $50,000 evaluation. Pass it. Turn it into a semi-live, guys. Turn it into real money. 80% off all other evaluations, guys. Keep 100% of the profits after 16 payouts. Now, here's the part that I really want to share with you about the funding company. What I'm about to teach you on TradingView, the plan that I give you for TradingView, you can pass the evaluation. There's no doubt in my mind. It's a very simple plan. It's a very direct approach. It revolves around advantages, guys, and I have already passed evaluations with this plan, and there's some of you in the room that have done it as well. The only difference really between TradingView and NinjaTrader regarding areas is zones. We don't have Fibonacci on TradingView, guys. We haven't been able to program it yet. We got people working on it, but apparently there's a lot to it. There's a company called Chart Prime. There's links from the website. Guys, they create supply and demand zones, and they're freaking outstanding. And they provide support and resistance. Good morning, Miss Cindy. Wonderful to see you in here. So you treat them like fibs. Don't trade right into them, right? These are areas that could stop the market. Instead of Renko bars, TradingView uses minute bars. If you are accustomed to NinjaTrader, guys, this is weird. Minute bars take forever, 15 minutes to produce one bar on the large chart, guys. That's a long time. But your 15-minute is your big chart. It will define direction, momentum, key targets, and terminations. Momentum and path, guys, comes from the large chart. Your 1-minute chart is a refinement chart. It defines the immediate strength. And we discuss the immediate strength because 1 minute is still a long time. And this is where you're going to define your entry points. And we use the two charts. Just a reminder, you're not in charge, guys, and the path of least resistance is to go with the men and women who control the market. I believe if you learn to read your large chart first, if you commit to reading your large chart first, it's going to keep you out of a lot of trouble. So there's 3 things that you do before you ever look at the 1 minute. The first thing is you just decide which direction the small triggers are going. In the plan that I give you guys, there is a minimalistic, that's hard to say. There is a very simple trading plan, guys, but a very simple workspace. And it takes the large triggers off, and it takes the colors off, and it keeps you focused on the most important elements of finding success with this platform, guys. So first, define the direction of the triggers. Are they going up or down? And here's one of the things I'm going to tell you is that if you can't tell if they're up or down, if they are flat, if they can't seem to decide, guys, then you don't have to decide. If you can't define up or down, how are you going to define direction? It's okay. That's your 90%. Sit on your hands. It only happens 4 or 5 times a day. Don't let it bum you out. It's going to pick a direction. So up, small triggers are up. I'm looking for rules to be met for trend trades long. Down. I'm looking for rules to be met for short trades, guys. Once you establish up or down, ask yourself out loud, where is the most current price in relationship to the trigger lines? So I took this right here and I blew it up. There's your small triggers. Current price is always highlighted in the price bar. And guys, when you ask yourself, where is the current price? It's not where is the tail from the bar that closed. It's not where did the body form. It is literally where is the market right now in the moment. And there's 3 options. You can be left of the triggers. Price can be right of the triggers. Price can be trading inside of the triggers. Each of these is still a long trade look. each of these still, we're only going up with the triggers. But the relationship to the triggers, guys, this is what's going to set you up for momentum. When you are left of the triggers, you're on the strong side of the triggers. And this is where 1 minute areas are more likely to break, guys. This is where big moves are more likely to happen. It doesn't mean just jump in and don't manage. It just means, hey, this is where the good stuff may go a little bit further. When I'm inside, when I'm in that transition, not strong or weak, guys, this is where I'm aware. This is where I'm taking half off at trouble. I'm getting to break even. I'm ready to manage. My management hat is on, and it's strapped in, guys. And then if I am to the right side of the triggers, weak, there's that word again, weak side. I'm still looking for long trades, but man, I'm ready to manage. I'm getting paid at areas. I'm not leaving risk on the trade any longer than I have to. So understanding where the price is in relationship to the triggers is going to help you understand how to manage that trade. And then finally, the question, is there room to targets? Because what good is entering the market if there's nowhere to go? What good is getting in if you're trading directly into something that could reverse it? So you're going to define direction, momentum, and path, guys. And when you have path, you'll always have direction. You'll always have a relationship to the triggers. Path is the one thing that gets you off of the 15-minute chart and pulls you over to the 1 minute chart to look for an entry. And there are two entries. With strong triggers, strong side on the large chart, odds favorable momentum, small separated from the large in the direction of your trade on the small chart. So that's the one lesson that comes over from NinjaTrader, guys. This is strong triggers. If there is no separation, there is no strength. With all of the momentum advantages in place, you can activate a limit order right at a zone, right at an HVA, right at 1-to-1s. And this is your momentum style trade, guys. This is the only time you will use a limit order to enter the market if you're following this plan. This is the only time you will wait for the market to come to you. Your stops are typically very small, behind that zone, 2 or 3 ticks. And guys, these trades will account for maybe 15 to 20% of the trades you take. When these trades fail, and the small triggers turn against you, and the momentum is gone, and the zone that you tried to buy breaks, guys, this is when you come to the trend trade entry. And the trend trade entry is going to happen more often, guys. The trend trade entry does two things. One, it has you waiting for a pullback to a lower area for a long, for a higher area for a short. And since these are minute bars, a lot of times you'll call your shot maybe 5-7 minutes before it ever gets there. But because the 1 minute shows immediate strength, right? Small triggers are down. Your entry rules say if you're going to go long, wait for a close, an up bar, where the top two corners finish above those trigger lines. The weak side, because the weak side is where reversals come from. And when it's bouncing off of an area and you get a close on the correct side, guys, this is your trend trade entry. Fighting the small triggers rarely works out. Fighting the small triggers is a great way to get run over. And if you're coming to TradingView from NinjaTrader, you have to abandon the idea as a brand new user that you're going to buy a pullback in an area, guys. You've got to learn the language. Because the small triggers turned against me, my entry is a close on the correct side of the triggers at an area. So two types of trades in the KISS plan, guys. There's the momentum trade. This is about 15 to 20%. And it starts by defining path, because path is the only reason that you'll ever go to the small chart. So no terminations or zones on the 15-minute. No trading into areas. On your 15-minute must be on the strong side. That's the best momentum look. And remember, this is a momentum trade. You can't take a momentum trade without momentum. Your 1 minute must have strong triggers, must have separation between the small and large. They must be going in the direction of the large chart. You'll use a limit order on that 1 minute to buy or sell at an HVA or an area. And your momentum trade should look like this every time. Small triggers up, strong side of the small triggers, absolutely nothing in the way. I can go to my smaller chart and I can put a limit order as long as I have momentum right at this zone. And guys, this is the momentum trade. 15 to 20%, maybe. Small stops, 3 or 4 ticks below the zone, because if it fails, it's probably going to turn into a trend trade. It's an acceptable loss. It's a good shot at riding momentum. But more often than not, you're going to get one of these guys. And once again, 15-minute, not trading directly into areas. I can't stress that enough. Most of the losers that I see are trading directly into something, guys. The 1 minute, not trading directly into areas. We're optimizing your chance of success. Buy or sell a close on the correct side of small triggers at a 1 minute midband or area. So if your momentum trade doesn't work out, if your small triggers roll, guys, smalls are up. Transition, room to targets. I never broke. I don't have momentum. The small triggers rolled against me. I call my shots. I say I need a pullback to an area, to a midband, to yellow 1-to-1s, to a zone. But I'm not just jumping in. I'm waiting for a close, an up bar to close on the correct side of those small triggers. Guys, this is your trend trade entry. This is the one that you're going to take more often than not. This is the trade that's going to keep you from getting run over. And let's see if we can find an example where it just doesn't close. You might have been looking for a long trade, and you never get an up bar that closes on the right side of the small triggers all the way down. All the way down. That's a down bar. That's a down bar. Guys, this right here at the very bottom, it doesn't even fit the rules. But that's your first up bar on the correct side of the small triggers. And check it out. That's where the market started back up. Even without the rules met, that's where the market started back up. Now the triggers are down. We're on the strong side of the triggers. We've pulled back to a midband. We're looking for a close on the correct side of the triggers to see if they want to continue down. That's it. We've got 37 seconds to think about it. 37 seconds. 30 seconds before that bar ever closes. 27 seconds before I know if I have a down bar with a close on the correct side of the triggers. Guys, if you're anything like me, this 1 minute bar buys you the patience that you may not have. It says don't trade directly into an area, right? That's a zone. If it closes on the other side from 88, I've got about 5 points to get to the next zone, which means that I've got room to make $100, but I still have not gotten a close on the correct side of the triggers. Does that make sense, everybody? That's your plan. It's either a momentum trade or a trend trade. Large chart leads the way. Small chart defines entry. I've got 41 seconds before I know whether or not my rules are met. Are there any questions about either? Are there any questions about TradingView? Where you find your rules met, how you read your chart, what your entries are going to look like? Guys, if you learn the very basic, you'll find the more advanced. On the KISS plan, checklist once again to get you in. Even how to manage it, guys. And it's just strong triggers, termination conditions, areas for entry. It's triggers, it's room to targets, it's areas for entry. Still no down bar below the triggers. Do you guys see that? Still no down bar below the triggers. The market still hasn't gone down. Still hasn't pushed down. My triggers are down. Guys, my path is clear. Uh-oh. And now they're starting to push back up. Now they're getting back in the zone. I've got 39 seconds before I know whether or not I'll have a close on the correct side of those triggers. Guys, patience is a virtue. Somebody said that somewhere once. 30 seconds. 25 seconds. 22 seconds. How easy, right? Just being calm. Just being patient. 13 seconds. 11 seconds. My rules say don't trade directly into something. I have to close somewhere down here. 4, 3, 2, 1. Man, I can't trade directly into a zone as a brand new user. I choose not to because this is an area that could stop the market or create a bounce. And I don't have to take chances, guys. I have an edge every time I take a trade. So the second half of class, guys, the second half of class is taking your pictures that you post in the room and talking about them, talking about momentum, talking about path, talking about entry, looking at advantages, making sure that you're reading your indicators correctly, making sure that the patience is there, making sure that you're following the plan that you told me you were following. Pete, Andy Man, Paul, I love this. Getting a lot of pictures in here today. You took that trade and it worked, Victor? Right on. So guys, we're going to go through. Wayne, are you here? Are you yoga? Wayne's at yoga, so we'll come back to Wayne's. And we're going to start with, looks like Victor. So trend trade. Let's see what you had, Victor. Triggers are up. Prices in the transition side. Space to the trouble area. Small chart. There was your up bar on the correct side. And you just got run over, huh? And then it gave it down here. How did you get in so low? Victor, how did you enter on the wrong side of the triggers? Do you see how you broke? Or is that the second trade? That's the next trade after the close on the correct side. Okay, hold on. So you got run over here. Sorry, I thought this was the same trade, but I see your exit. So you were in at 48.31, little close right above, out at 23. A lot of risk on that one. Just didn't work, ran you over, and then there was your second entry. Looks like it popped really quick. Not a lot of room. Not a lot of room from the transition side. You had 2.5 points. You had $50 worth of room to get to trouble from the transition or the weak side of the triggers. That's going to be a tough trade. That's going to be a hard to manage trade. And we'll see what it did. Caleb, this is you, right? Let me figure out where you did what you did. 62.30, 62.30. So the triggers rolled. You take a momentum style trade right off of the mid band after the termination. I like it. Puts in a bottom. Triggers roll. Odds favorable. Snap back to the mid band. Out at trouble. And then down here at the bottom, I'm not sure what kind of trade this is, Caleb. Maybe you trying to take advantage of that termination condition and just getting in on the right side of the triggers with the smalls above, which I love. Good look. And sure enough, the bottom was true, and you ride it all the way up. Nicely done, Caleb. Some good-looking trades. Good-looking trades. Good reasoning. Logic. Momentum and path. Odds favorable. Let's see where we're at. 32, 32. Everything's up. Pull back to the area inside of triggers. Get in, get paid, get out. And then when nothing changes, getting in with that momentum and riding it up to the next level. Really nicely done, Pete. Great looking trade. Guys, momentum and path, it's going to be difficult. It's going to be difficult for you to not find a way to get paid. This is huge. All right. Was this your second trade? And then I like it. You did make 100. And then you gave it all back into the area, Victor, right? When I'm transition, and what I do, I guess doesn't matter, but if I look at my large chart And I am weak and I'm transition. I refuse. I refuse to give money back into an area. I typically refuse to even trade into an area, but you got in. You sat through the bounces, right? You did make your $100. So you made 5 points on the way up, 4.75, but you gave two back. So you're net $80 trading into trouble. I don't know about you guys. I don't need that stress in my life. There's too many good ones. Too many good ones. Odds favorable momentum. 3 triggers through. Divergence prints. And you choose not to take the entry. Nicely done. Divergence is the biggest killer when the potential is there. Nicely done, Pete. Great chart read. All right. Who do we have here? Andy? Potential to break, 3 triggers, odds favorable, no divergence. Placed a long order at the high point, took a loss, and then there's the divergence. And it's a good looking trade. You bet on the potential to break, and it didn't. And that happens. That will happen sometimes. And then divergence came in and messed with you too. Guys, did you know that losing trades is okay? Andy, you had every advantage. You had a strong bottom. You had crazy momentum. You had 3 triggers through. You had a well-defined area. It just didn't work. Guys, sometimes that's going to happen. You're going to learn to be okay with that. You really will. Entry stopped out. Profit targets here. 15-minute triggers are up. Transition. I'm trying to see where you entered. You entered at 24. So you were transition to weak. Small triggers were down. Large triggers are flat. No momentum trade on this look. Guys, you got to have strong triggers. Definitely not strong triggers. If you were looking to go up, there was your close on the correct side of the triggers for the long. And it went right into trouble, didn't go anywhere. And then the market headed down. Make sure you have strong triggers. Wide. Great space, guys. You can't take momentum trades without momentum. It just doesn't work. And that's a great example of it. Can't take a momentum trade without momentum. John Novak used to tell me that. Weak top, triggers rolled, odds favorable, nothing in the way. Pull back to the mid-band in the retracement zone. Easy money, Pete. Good looking trend trade. What a good looking trend trade. So everybody that got a lesson, trading into an area, gotta manage, right? Can't take a momentum trade without momentum. Guys, there's a lot of little lessons that fall in your lap each and every day. Take those lessons. Take that feedback. Do it better next time. Uh-oh. Let's see if we can get that to open. There we go. All triggers up. Room to trouble. You take a momentum style trade, Mike. Nice. It does pull back a little deeper. Money. Money. Great job. Sorry that's so big, but they're giving me fits. Take the first off at the first sign of trouble and take the second off at the second sign of trouble, guys. Momentum and path. Room to targets, right? There's your momentum style trade. Right off the fib. Perfect execution. Never gets where the market shouldn't go. And easy money. Mike M, nice trade. Miss Jen, everything says down. Strong side of the triggers. Pull back to the mid band. Close below. Quick 250. Nicely done. Right to trouble. Quick 250. Strong side. So this area is more likely to break. Jen says, I'm not trading into it. I'll get in below it. And you got in about 85.50. Room to manage. Absolutely gorgeous, Jen. Nicely done. You guys are so smart. So smart. And just a heads up, if you're using screencast, guys, if you'll put a screencast link instead of copy paste, Discord's doing weird things. And I can't open your charts. It just spins and does this for me. It'll keep me from having this giant. Was looking good for a short. Odds favorable momentum. 3 past the VWAP. Divergence prints, no trade. And it keeps you out of trouble. Nicely done, Andy. Not a clear path. Divergence prints. Avoidable loss. Perfect. Alright, we're going to do this. Because these are just coming out too big. Alright. Odds favorable, clear path, sold short, took some profit off, out with divergence. Nicely done, Andy. Didn't have a clear path though, right? Those pink 1-to-1s were in the way? Or was it down here? It's hard to tell. Got below trouble, all the momentum. And guys, this is a NASDAQ thing. And I want to show you what it is. If you are trading NASDAQ on Rinko, guys, fighting these small triggers is tough. When your small triggers turn against you, make this bigger. When you get to the areas, I think you were good, Andy. I was just looking up higher. You were momentum and path. Great patience on not fighting the small triggers, getting in on the close on the correct side, and down. And I agree, Victor. I think that trading Ninja Trader or trading NASDAQ on Rinko, you've got to know your rules. You've got to know what you're looking for. And Andy, you do a great job of it. You're so in tune with what you're looking for these days. It's pretty awesome. All right, Victor, looks like you and Jen are in cahoots. Trend trade down. Price on the strong side of triggers. Plenty of space to the next trouble area. On the small chart, I love the language that you use. Triggers rolled. Price finally closes on the right side of the triggers. Off one. Oh no, you're out both at 73. Great 6-point trade. Oh, so you took one off and then you took two off. Nicely done. It's a great trend trade. It's the same one Jen took. And Jen, you said you could have managed yours better. Yeah, if both exits are on the same bar, it'll show you the average of your exit, Victor. One of the things with the minute bars. And Andy, you're right. If you're making money, why would you change? If you're making money, why would you change? Triggers down, strong, clear path. Andy, you take the close on the correct side, and you make an easy $400. Absolutely beautiful. Andy V. My Andys are killing it today. My Andys are killing it today. Trying to make these so that we can see the whole thing. There we go. Smalls are down. Transition. Market pulls up. Closes below. And you were in at 55. So Andy, directly into trouble, right? Do you see it, Andy V? You got in after this trouble, but directly into this trouble. from the transition. And that trouble did exactly what we would expect it to do, right? From transition, that's 2 times this morning we've seen it. Trading directly into an area without the best look, and it just bounced and it got you. It happens. It happens. Room to targets, guys. Room to targets is one of the greatest things you can do. And then Paul said, didn't take it with all these zones. And it doesn't look like you had a lot of room, Paul. And I will support your right to not trade into areas every time. Guys, I will support your right to not trade into areas every time. Because they can stop a market. Even with strong triggers, guys, give yourself... My rules say give myself at least $100 worth of profit. At least $100. Because it gives me time to manage, right? Well, Victor, right off of the termination, that's where it bounced up, right? Came and hit the termination. That's where it's coming down with a close on the correct side of the triggers with down triggers. And I don't know why it's not showing on my small chart. There we go. And from the strong side, you can take a shot. Trading into areas, right? You can hide behind areas. Can't do worse than 820 on this 4 lot. And if it goes to the next zone, it's good. But guys, it was down. It was strong. It was a pullback. It was a close. And boom, there it is. It trades into an area. From the strong side, 1 minute is more likely to break. That's how you would take a shot. Pretty cool, right? But it didn't go down until it closed on the correct side of the triggers. That's what I want you guys to see. The market never even considered going down until it closed on the correct side of the triggers. So if that's the only lesson that you take out of today, wait for that down bar on the correct side. Guys, if that's the only lesson that you take out of today, you will walk away from today a better trader. And they did make it to the next zone, didn't they? Pretty cool, right? That's what we do. Day in and day out. Termination, reversal, strong triggers. Just nowhere to go yet. Nowhere to go yet. No momentum, no clear path, just nothing to do. Sitting on my hands, being patient, waiting. Waiting. My money is worth the wait, guys. So I'm going to take 5 minutes. Guys, go stretch your legs. We've made it through all the pictures. So here's the rest of our day. This is what I was hoping for. This is the Ninja Trader KISS plan. If the rules are met for high probability trend trade, if the rules are met for medium probability trend trade, we will pull the trigger and trade live. Same thing on TradingView. If the rules are met for a trend trade, we'll take the trend trade. If the rules are met for a momentum trade, we'll take the momentum trade, guys. But the only way we pull the trigger in this classroom is if it fits the checklist for entry. And if it doesn't, we're going to leave it alone. Is that cool? You guys good with that? In the meantime, post them if you got them. Ask a million questions. But guys, triggers down, strong side, nowhere to go. Nowhere to go. No room. No room sucks. It's a technical term. I'll be back in 5 minutes, guys. Post them if you got them. Which one, Cindy? For TradingView? You know that I share these. Which doc for NASDAQ? Which platform? Which platform for... Here, I'll just drop them both in. There you go. The KISS plan is for Ninja. The NT KISS plan is Ninja TV KISS plan. Cindy, your automated system was created around the same checklist. It really was. It was created around the same checklist. So, have you watched John Novak's management videos yet? The small chart management videos? Freaking amazing. I've watched them twice. Good stuff. Guys, I'll be back in 5 minutes. Go stretch your legs. Second half, it is live market. Rest of the day, guys. Live market. Where do we get those small chart videos of Novaks? They're not TradingView, Paul. John's new videos are for small chart management on NinjaTrader using the automated system. But the small chart management is consistent whether you're using the automated system or not. It's a great management video if you're one of my NinjaTrader users. And it just talks about different concepts. It talks about divergences from one-to-ones and second and higher low divergences and these things that that really do affect the potential of a trade to win. But it's not the same for TradingView. TradingView just moves too slow compared to the dynamic Renko bars. All right, Andy. And again, guys, if you're using Screencast, do me a solid, drop your Screencast link instead of the picture. If you're using Screencast, please use your Screencast link. Discord is messing me up. Rule broke, didn't mind breaking because of momentum and clear path. Jump the fudge in, make all the money with momentum and path, and out with profit. Nicely done, Andy. With momentum and path, you will find a way. Great job. 500 on the day. Nicely done. All right, chicken trade. Not sure what that means. Let's find out. See if we can make it bigger. I do love chicken. Chicken trade. Price down. Triggers on the strong side. Little space to the next trouble area. Need to manage assertively. Small chart. Triggers rolled. You get in at 81.75. You get out at 66. It's nice $600. Not bad for chicken, right? Guys, when everything is screaming, winner's taking the loser out to lunch. It's tax deductible. I love it. When everything is screaming, guys, that's where you're more likely to break these areas. And Victor, you do a great job of it. And man, $600. Didn't even have time to move the stop loss. Chickened out. Trade got to 900. Hit the close trade. Ended up with 610. Not bad for chicken in and out. Not bad at all. But your chicken is rooted in advantages. Like, it's not like you're just making stuff up, Victor. You're literally taking strong side of the triggers, and you're taking the close below the triggers, and you're managing out at trouble. And just because it moves fast doesn't make you a chicken. It just means you're like, wow, there's trouble. Let's get out. All right, Jen, termination. Small's below the large, but you take the HVA and you make a couple bucks on the way up. And I'm trying to see your entries. There we go. Termination, HVA trade, in at 68, out at 73, quick $200. And you did realize that you broke the rules a little bit with the smalls. But when you've got terminations on both sides, right? Terminations, triggers rolled. It's a little assertive, but it worked out for you. That's okay, Jen. I know that's your only way. But for people that have the option, it's helpful. All right, termination, triggers rolled, not odds favorable momentum. Nothing to do yet on crude oil, guys. Make sure that my KISS plan management is in there. Smalls above the large are trying to get wide. Absolutely nowhere to go. So NinjaTrader users, we have two markets, no rules met. I do have momentum. I don't have a clear path. Does everybody see it? My plan says absolutely no trades if the rules aren't met. Don't have the best momentum. Don't have entry rules met. My plan says if my rules aren't met, don't take a trade. Trading view. Smalls are down. Weak side of the smalls. Can you hear me, guys? Give me a Y if you can hear me. Okay. Coming back, guys. All right, can you hear me now? Did that help? I'm talking. Are we good? Nobody? I'm talking. Andy says yes. No, no. So some good, some not. Okay. All right, guys. Did that help? Am I back? Am I good? Any audio? No audio? No? Okay. Sorry, YouTubers. Happens sometimes. All right, guys. Fingers crossed. How'd we do? We got it? Cool. Nothing that we can't fix, guys. Marky Mark. I said please come back. Guys, there's nothing that we can't fix. I feel trading's the same way. So guys, on the S&P transition, I've got no room, right? There's just no way to go. Nowhere to go. Strong side of the smalls. Room below. Not a lot of room on the small chart. Areas, VWAPs, HVAs. A lot of trouble in the way. That happens when there's all the consolidation. Hunter, let's see what you did. Thank you for the link, Hunter. Go fix your mom's. Snag it. Triggers are down. Wasn't a lot of room. You bought on the strong side. Because right side, because it was strong, even though it broke into a zone. So you went short. Is that right, Hunter? Right into 72, right into the zone. And it held. It held. Happens sometimes, right? Good lesson there, though, guys. I don't know about you guys. I make mistakes. I trade into areas sometimes. And then you just get right back at it. Get back on your horse and move forward. I think taking those losses is great. I really do. I think making mistakes every now and then, reminding yourself that you're not superhuman, right? That the rules do apply to you, that areas will hold against you more often than they don't. I think if you don't take those trades every now and then, guys, you find yourself feeling indestructible. So Wayne says, check it out, guys. I've got momentum on my large chart, and I'm breaking above areas. And I've got momentum on my range chart and nothing in the way. And I've got momentum on my small chart and room to trouble. And just boom, in and out, Wayne. Nice trade. When all three charts have momentum and nothing in the way, guys, it's going to be hard to stop that market. Wayne knows that. Easy money. He says, well, if I can do it once, I can do it again. There's momentum and nothing in the way. And there's momentum and room to trouble. And there's momentum and room to trouble. And then, Wayne, I want to give a cool lesson that you may not need. But you guys that are just jumping in, right? Quick profits, super nice. I'm going to show you this cool thing, guys. As long as price doesn't close below these triggers, it's going up. Guys, as long as price doesn't close below those triggers, that market's going up. As long as price doesn't close on the wrong side of the triggers, that market's going down. This is the same reason on TradingView we don't fight those small triggers on entry, guys. On Renko, you've got a little better chance. But you can use this. Wayne, you had such a beautiful look on this chart. This chart gave you the opportunity to hold for those bigger targets for sure. Nicely done, Wayne. I like even small profits. Any profits are good profits. Wayne does it again. Momentum, room to trouble. Momentum, room to trouble. Momentum, room to trouble. Wayne, here's what I want you guys to recognize in the room, if you don't mind. Momentum and path, guys. Momentum and path. He didn't wait for a pullback to an area inside of triggers. He said this market has momentum. The odds are favorable for it to continue in the direction of the trend. There's absolutely nothing in the way. The price, if it's under the trouble. Sergio, will you show me a picture? Are you talking termination conditions? Rule number 2? We can do that. I think that's what you're asking. I gotcha. No worries. Got one more for Wayne here. The picture I just had right here. Oh, this one. Hold on. Where we talked about bigger holds. Sergio, hold on. Let me get to it. Make sure I'm talking about. I show so many pictures, sometimes I lose them. This one right here. Was it Wayne's chart or was it my picture? Either way, we'll figure this out. Wayne's chart. Okay. This one? Cool. So start on the large chart. Smalls are above the large. He's beginning to get space, momentum. He's got strong triggers on this range chart that he uses. He's got strong triggers on the small chart that he uses. Do you see all of that, Sergio? So basically, every chart he has is screaming up. Wayne says, I've got from here to here before I hit anything that could create a bounce. And that's exactly what he does, is he just jumps the fudge in with all that momentum. He gets out right at trouble, and he doesn't care what happens next because he made $450 on that particular trade using nothing but momentum and path. Daily goal met before going to bed. Literally did all the trades walking by the computer during pauses on movie night. Guys, when you know your plan, that's what trading is. Trading is done quick. It's advantages. Does that make sense, Sergio? He's not using the trend trade here. What he's using is the idea that when he has momentum and nothing in the way, he'll find a way to make money, guys. Pretty cool. Good stuff, Wayne. Victor, maybe I'm growing as a trader and in confidence, starting the day with a $310 loss and it didn't faze you, got back on the horse and kept on going for 2 days, got 8 wins, 1 loss. Hope I don't get overconfident. Great job, Victor. I started off my day with a $300 loss too. Took the perfect trade. I took the perfect trade. Ran me over. I mean, flattened me fast. And it was higher risk. And then 2 minutes later, took the perfect trade, got it all back. So, guys, that's trading. Trading is about winning and losing, right? Trading is about not giving the market as much as you take from the market, I think is the easiest way to say it. It's about not taking risks, trading directly into trouble. It's about not hoping the market goes down without momentum. And guys, look at this. Strong triggers, room to trouble. Are they going to give us a pullback right to an area inside of triggers? Wayne, did I really? Sorry, I probably read that one that said daily goals met. Price reaches a termination condition. Small triggers, large triggers are a full bar away. Gap theory, price returns to large triggers. Great patience on your entry, Wayne. You get one divergence, you get your small triggers up, and you get in on the right side of those small triggers and ride it all the way up to close the gap. I love everything about this trade. It looks like it's counter trend, but it's very much just termination, waiting for a slowdown, and then having the expectation of where the market is likely to go because the large triggers are so far away. Really nicely done. I'm glad that I caught that one. All right, guys, let me know if you see it. The smalls are separated from the large, even though it's a little bit. I have not reached Fibonacci support, momentum and path. If I get a reversal bar, my entry rules say price is likely to retrace somewhere from the bottom of the large triggers to the top of the large triggers. Price is most likely to bounce from the area inside of the triggers. I'll put my limit order just below the area closest to where I'm hoping I get a reversal bar before it hits the target. Does that make sense, everybody? This is your trade. Demanded momentum, insisted on a clear path, defined an entry. The only thing I'm not in charge of is whether or not that market comes back and gets me. But that fits the rules. Good top, triggers roll, nothing in the way. Pull back to the area inside of triggers. You did get stopped out, and then you re-enter and make it back. Nicely done, Miss Cindy. First one just ran you over. That's the NASDAQ. It'll do that from time to time. Great heads up, great staying in the moment and riding that momentum down. Beautiful recovery. Guys, you're going to take losers. Losers are such a normal part of what day trading is. You get to pick the losers that are the right losers that had a better chance of winning, or you can pick the losers that you hope do something that the market, that the indicators aren't telling you that it's likely to do. And Cindy, take that loser all day long. You had momentum, you had path, you had entry. They just decided to push up a little bit more. And the cool thing is, and let me go back and show it one more time, is Cindy didn't say, oh, the market hates me, I hate life, I can't believe this is no good, Novak sucks, I hate it. Cindy says, no, it's still a great look. Let me just get in on the correct side of those triggers. Let me wait for them to confirm they're going down, and I'll just go again. Nicely done. Love it. Great job, Miss Cindy. Well, they didn't come get us, did they? And now it's 2 triggers through. Just need those 3 triggers. Just need those 3 triggers to fit the plan. Considered a 50-50 because of the mid-band? No, ma'am. So a mid-band, Miss Cindy, is a termination condition. Whoops. The mid-band is considered a termination condition. It's a great question. We have time. When, I'm going to give you the language for the rule so you know what you're looking for. The mid-band is considered a termination condition when the large triggers are a full bar away. So if those large triggers are not a full bar away, your mid-band is not behaving as a termination condition. And then let's pull up Wayne's picture real quick. When you get to that mid-band area and the large triggers are a full bar away, that's what defines the mid-band as a termination. This one happens to have Fibonacci there too, but even if there was no blue fib, because price reaches the mid-band and the large triggers are so far away, that's when it becomes a little detrimental. So you were good there. Perfect. All right, only 2 triggers. Divergence prints. It did pull back to the area inside of triggers. If you took this trade, you have to manage it. It's a medium probability. You're hoping that the area breaks. 1 divergence is pretty detrimental. The plan says don't have it. So it would be considered a clear path, Cindy. You have, well, let's look at the big picture real quick. You have all of your triggers below the fib, right? But you have reached a pink 1-to-1. Almost. You haven't quite reached it. So you're good. That's momentum. You've got the clear path. From your entry, you've got room to trouble. That's a good look. Look at that termination. Full reversal. 2 triggers through. It's Yasvani's question. I like that he has you to talk for him. If you want to work on that mid-band as a termination condition, it's the gap theory. He's here making you crazy. Tell him to stop it. There we go. Give him this picture and tell him to go study. But that's a great picture of when the mid-band is a termination condition and how to identify it. That's the gap theory right there. So if it doesn't look like this, not a termination. That's a good question. I love that you guys trade together though. That's awesome. My wife told me when we go back to Texas, she's going to trade a little bit. I said, you do it, honey. And they are going down with the potential to break, right? Now they're back to trouble. We'll see how they react. Did you guys know that 90% of your day is doing nothing? That 90% of your day is staying out of the market, that 90% of your day is not entering the market. And guys, we're seeing that right now. We've got an hour and 20 minutes left in this classroom, and all we're doing is waiting for rules to be met, and it hasn't happened yet. Have you guys noticed that? It hasn't happened yet. I've got triggers down. I am on the weak side. I don't have momentum for a momentum trade. The only way I could take a trade is with a close on the correct side of the triggers. Guys, look where my triggers are. That would put me into 2 sets of 1-to-1s, an HVA, 2 zones, and nowhere to go to get to that next trouble spot. Does anyone else feel like going short there is probably a bad idea? Doesn't fit the plan? Doesn't make any sense? Not worth risking your money? That's what I'm hoping. Bad idea, right? Triggers are down. Strong side of the triggers. We've already reached trouble, and look at the reaction. Small triggers are up. So my only option is to close below those small triggers, and there's nowhere to go. Once again, no room. Very spiky 15-minute candles, yep. Well, and that was that 10 a.m. news maybe? I don't know. But guys, that's why we don't even have large triggers on the large chart. That's why I don't even use large triggers. It's like a glacier. There was high impact news at 10, right? So guys, look at this. Tried to go and couldn't. Tried to go back up and couldn't. Tried to go and couldn't. Tried to go back up and couldn't. Tried to go and couldn't. Tried to go back up and couldn't. Tried and couldn't. What does that say about this area? And if you were thinking of trading directly into that area, are there any context clues telling you that you hate money? I hope so. The big boys and girls are definitely in a fight, Jen. Let them fight it out. And who knows, maybe they're anticipating Trump to say something and they're jockeying for position. The buyers are like, the sellers are like, oh, let the buyers win. Let them get us to our spot, and then we'll just unload when news comes out. And maybe the sellers are thinking the same thing, right? Let the buyers push it. Let them get us there. Let them take their profits, and then we'll enter on the reaction. And guys, they're stuck. Look at your small chart. Stuck, 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 stuck. There's just not a lot of room. And the more consolidation that you get like this, the more zones show up over here. And I don't know if you guys realize it. Some of you find it very frustrating. I find it amazing. Because when they're fighting like this, that's when the zones are stacked over here. That's when I don't want to be a part of the fight. And the zones really keep me from doing stupid stuff. Which isn't easy to do, guys. I'm really good at doing stupid stuff. Triggers are down. Strong side of the triggers. Smalls have rolled up. My only option is a pullback to an area and a close on the correct side. How's that? Making lemonade from lemons, right, Jen? You can be frustrated that there's stuff in the way, or you could be thankful that there's stuff in the way. Could you imagine, Jen, not having any of those zones and wondering why the hell the market won't go somewhere, right? But you see them everywhere. This is your small chart keeping you out of shenanigans. I love it. I love it. Only 2 triggers, still hasn't broken. Shenanigans. It's just fun to say. Only 2 triggers, divergence, guys, biggest killer, second higher divergence. If you are watching John Novak's video on small chart management, second higher divergence tells you to get the hell out. That's a good look right there. Divergence directly from a fib. Says that fib is more likely to hold. There's so many patterns, guys, and that's all it is. It's just patterns. Watch this. Let's see if we can. That's not really it. Some of you know exactly what picture I'm going for. Look at that. Guys, there's rule number 2, keeping you out of a market that consolidated overnight. Look at that. From boom, bang, bing, pow, zing, wow. Nothing. Nothing to do. No reason to lose money. No reason to take the short, right? No reason to go long. No reason to go short, guys. There's so much opportunity in the market that you will realize eventually you don't have to be in every move. You don't have to take every turn. Every tick doesn't belong to you. The market trades billions daily. The S&P alone, this market, averages about $174 million exchanged every day. Every day. $174 million exchanged. Did you guys know that it takes 400 of that to get you into 6-figure income? That's nuts to me. It doesn't take a lot of money. Doesn't take a lot of money to make a lot of money. Missed out on that one relaxing. 2 triggers through. That was 2, not 3, but that's okay. Pull back directly to the area. Beautiful trade. Especially when it comes from a strong bottom, Andy. Paul, he usually takes Monday, Tuesdays off. Ron doesn't show up in the room because he needs help. Ron has a very clear plan with very precise rules. Ron comes here for the social aspect. It gives him something to listen to while he's following his plan. So he usually spends maybe 3 days in the room. Mondays and Tuesdays he takes off, long weekends, goes to the beach, trades on his own. He'll probably be here tomorrow. If he's not, that's when we'll send the search party out. Hopefully they're okay over there. I'm not sure. I thought it was hanging a right and heading towards Europe. I don't watch the weather a whole lot. That was a good one though, Andy. Victor says, interesting, had to do another IQ test, and the strongest area of your test, the one you got the most points, was pattern recognition. Maybe you are in the right business. Yep. And you either see them or you don't. There's people that struggle with patterns, and there's people that are great with patterns. Patterns has always been a strength of mine. You guys. Patterns has always been a strength of mine. When I was learning to tattoo back in the day, look at that from the term. I did a lot of tattooing on my own thighs. That's how you learn back in the day. Everything was upside down, right? And people would always say, how can you draw upside down? It's like, well, it's just shapes. It's just patterns, and it worked. 2 triggers through. Not 3 yet. We're getting close. Jen, I mean, yes, tattoos hurt, but now we're 3 triggers through. When you're learning, it's you're so focused on what you're doing that you don't think of the pain so much, I guess, maybe. Still hurts. We love tattoos. Yes, we do. Most people find it interesting that I do that. Really, you teach people how to day trade and you tattoo? Man, Victor, I've got friends that I've tattooed that have phobias of needles, but still don't have a problem with tattoos. So there you go. That's what I do, guys, when I'm not day trading. Ta-da-da. That's my Instagram page. Oh yeah, Victor, I full time in a shop for years. Full time in a shop for years. I couldn't hear it. I had mine muted. Um, I love art. That's why when I tell you guys I'm super artsy fartsy, I'm not your tech guy. I don't care how fibs are made. I understand how they're made. The numbers that go into a 55 EMA don't make any difference to me. It literally is just patterns. It's just patterns. It's just seeing something and recognizing advantages and then capitalizing, right? Here you go, Jen. My NASDAQ traders. Triggers up. Strong side of the triggers. Room to trouble. Just got some nonsense in the way here. Got some nonsense in the way. It's that darn nonsense. All right, guys, I'm going to walk away for 5 minutes. And we're just going to keep reading our charts, guys. If we get an opportunity, we'll take it. If we don't, feel free to fill the gap with your questions. I'd love to hear from you. I'll be back in 5. Last hour belongs to you. That was a big push up, wasn't it? Right off of support, right to a divergence high, right to the top of a zone. No odds favorable momentum. What a great opportunity for the market to pull back to an area, possibly look for an entry with a close on the correct side of the triggers. S&P did the same thing. Guys, this is that talk I was talking about. If you're not sure if they're up or down, they're not up or down. How do you decide which way to go? If you're not sure if it's pointing up or down, you don't have the momentum here, don't have a clear path, it's all right to do nothing. Crude oil, they're trying to push down. Looks like a big grind. Hard to find an entry. Andy has gold. I believe that was the one right there. Pull back, close on the correct side, and eventually it just ran. Straight into a divergence high. There was your pullback to the mid band, got to the fib, got to the divergence high. Gonna see what happens. Can you guys hear me? Just want to make sure. 3 triggers through, multiple divergences. Nobody can hear me? Damn it. Yes? Okay, cool. Guys, what do you want to talk about? I don't have rules met on any of my charts, so I'm obligated. Like, I am 100% committed to not entering a trade if my rules aren't met. I'm 100% committed. Question, we've already reached an area. Even if rules met on the small, is there any pattern recognition that might occur for it not to work? I remember John saying something like that. So what he's talking about, Jen, is they've already reached the target, right? And that's kind of the idea, is that they have already reached the target. They've already gotten where they're going. If that's going to be a top, and let's go to it. If that's going to be a top, that was your momentum trade right there. And it worked. And it took you up to the top. And now they're in decision making, right? So if I'm going to take a long trade, Jen, I'm probably not going to fight. Let me show you this look. I'm probably not going to fight strong triggers against me. If it looks like the market's making a huge reaction off of that top, if it's super strong against me, I might let it slow down a little bit and head the other direction. And it's not even that there's pattern recognition here. It's saying to yourself, okay, they've reached an area that could potentially be a top. If I'm going to take a trade from down here, I'm going to make sure that I've got room back if there's a retest. I'm going to make sure that I'm not trading directly into a zone. I'm really going to let it be my best look. We are on the strong side of triggers, and we will be on the strong side of the triggers all the way down to 82. All the way down to this area right here. What a great spot for a retest, right? Yeah. It's just recognizing, and this is one of the things about 15-minute, Jen, is they hit it and there were shorts, right? And they hit it and there were shorts. And they hit it and there were shorts. And notice how before it failed, we ended up transition. Before it really failed, we ended up weak. You can see the difference. From a strong side, retest makes sense. From transition, be super assertive. From weak side, I just don't think it's probably going to work out. So we're in that same thing happening right here. It's all long trades. Yeah. It's nothing but longs for me, especially if I've got room back to trouble. And that's one of the things with the 15 minute. On Renko, says don't trade into a termination condition, right? No matter what, let it break. 15 minutes, just not the same. It's too big. It's too slow. Let's see. 15-minute chart here, so from 48 to 03. All of that happened inside of one bar when you go to TradingView. All of that happened inside of one bar. Let's see if we can do it again. From 35 to about 40, all of that is one bar. There's a lot that can happen in those ranges. So you do have to lose that Renko mentality a little bit. It's hard to make that switch, guys. I know that it is. But there's so much. I mean, this one bar went from 90 to 55. 65 points inside of one bar. Let's do this real quick. This will be fun. Maybe. So inside of that one bar, ish, was, well, all of that, essentially, from the very bottom here all the way up. Just a lot that can happen in 15 minutes. Now we've got a textbook pivot stop out. The triggers are still up. The small and large are up, but I don't have momentum. I don't have path, right? So we're just kind of holding, guys, holding pattern. And this is one of the reasons why I think when we declare, guys, we're going to wait for rules to be met to enter the market, a lot of people are surprised when I don't take a trade for an hour. A lot of people are floored when I don't just pull the trigger, when I'm not a part of every move, when I'm not chasing every tick. And they're like, wow, he was serious. 90% of the day is doing nothing. Guys, my most profitable days are typically on the least trades taken. And there's a point where when you take the right trades and they don't work, there has to be an off switch. There has to be a, okay, I took 3 perfect trades and they're not working. I have to shut it down. I have to not. The market's not doing what the market typically does. Guys, I had that yesterday. I was up a couple hundred and then I took 3 in a row that didn't work. And then I got some of it back. And then it was 2 in a row that didn't work. And I was like, oh, that's 5 out of 6. That's not my percentage. Something isn't working the way it's supposed to work. 3 triggers through, almost 4. Pull back. I'm not sure. I'm assuming that this pulled back and you're like, let me let it all go the right way. And you're in. And you've got targets, and it looks like you're trading without stops, Master B. But you took the area, you caught it on the way up. I don't see any stops. And I don't tell you guys how to manage your trade, but boy, I would hate to have a giant spike down and have to react, right? I'd hate to have to go to the bathroom and say, well, it's got tons of room up, but it's not all the momentum pushing. It's a couple divergences. I don't know where your stops are, but I hope they're in a good spot. Hopefully they're where the market shouldn't go, and you're not just expecting the market to go up without momentum and you're not just expecting the market to go up without a clear path, and you're not just expecting the market to go up with multiple divergences and small getting below the large, right? Small chart is starting to tell you, large chart is starting to tell you. Does that make sense? It is weak. It's not even getting weak. It is weak. And it's multiple divergences. And it's not a clear path. And it may go up, but my indicators are telling me that there's a struggle happening. My indicators are showing me that I'm losing momentum. My indicators are showing me that at the exact same price, the sellers stole momentum from the buyers. My indicators are telling me that my large are rolling, that my smalls are down strong, that things are beginning to push, that they're struggling to break that area, you know. So again, guys, I don't tell you how to manage your trades, but there's a lot of visuals going on from the indicators that are telling me that my momentum is losing, that my path isn't clear, that my first two core advantages are struggling, and I have to be willing to accept that. One of the things that I like is if you enter the market because of advantages, right? If I get into the market because I have strong triggers, because I have no terminations, because I have an area, there has to be a willingness to manage. That's one of the reasons why I like multiple contracts, because from your entry, easy money, right? And now we're just like, oh, I hope. And gosh, I hate using that phrase, I hope. You took your target, right on. I'm not trying to talk you out of anything. I'm not trying to talk you into management decisions. I'm just reading indicators. I'm just reading indicators. And if it's still going to go up, these small triggers will roll on my small chart. If they still want to push up, these small triggers will roll, and I can look for another opportunity. And we'll see what happens. It's just reading indicators. Everything's green. I like it, right? But just from a language standpoint, first it's divergence, right? Then it's a second divergence, and then it's a trigger change, and they're still not outside where the market shouldn't go, but I can see there's the potential for a third divergence, a lower divergence. Just getting my management hat on. That's it. Just getting my management hat on. This divergence may never be true, but I have enough to see to say that they're going to struggle. So yeah, Master B, do you suppose there will be another opportunity today? Do you suppose that the market will offer another setup today? Yeah, hell yeah. I like a good hell yeah. But do you see how when you're not connected to the money, you're connected to what the indicators are telling you? Now it's 3 divergences. This one's lower. I still don't have the best momentum. Now I've got odds favorable momentum against me, and look how they're reacting. How freaking amazing that when you let it be pragmatic, when you let it be emotionless, when you simply say, I'm losing my advantages, maybe it's time to manage. Maybe it's time to exit. I'll just wait for the next trade. But did you start to see how this was imminent? How you could see that momentum was going away, that the path wasn't clear, that we were losing momentum over here, that things were changing? And instead of hoping the market goes up, you say, F it, I'm going to get out. I'm going to protect my investment. I'm going to wait for the next trade. That's one of the cool things about reading charts versus looking for money with better odds. with higher probability. The difference between hoping the market goes up and waiting for it to go up, and guys, every indicator is above this fib. That fib's more likely to hold than break. Let's get those small triggers to roll, right? Let's get things pointing the right direction again. Let's get things above trouble. And guys, maybe find a continuation entry in there. What's it look like? Well, when 3 divergences take me out of an entry, but my large chart still supports more longs, let it all roll. How I talk through makes sense. Master B, you'll get to that point, but this is one of the things that's nice about large chart reads when you guys have presented everything you're going to present. We can talk through exactly what the indicators are saying. And this is why, do you guys remember every morning, I start with this picture. Every morning, I start reminding you that it's about the chart reads. It's not about the money. It's about the process. It's about the patience. It's about understanding some concepts based on your chart reads. And that's all it is every day, guys. Every day. It's learning to read your indicators, recognizing advantages, being able to say to yourself, this is freaking amazing. I can't wait to be in that market. This is not amazing. I can't wait to sit on my hands and see what those jackasses in charge want to do. Because I'm not that jackass. I'm a totally different kind of jackass. But I'm not the one that moves the market. I'm not the one that controls trends. I'm not the one. There's the same thing. Only 2 triggers through. 1, 2, 3, 4 divergences. Higher divergence. Change of direction. My small chart is telling me in no uncertain terms that there may be change coming, guys. So until I get everything to agree again, I'm cool doing nothing. Do I count triggers through a band? The bands are a little different, Master B. The bands are a moving average, not a solid Fibonacci area produced from the past movement in the market. So, my rules for identifying the mid-band as a termination condition are Nexgen's rules. And it says that in order for the mid-band to be considered a termination, my large triggers have to be a full bar away. So in your picture, Master B, those large triggers weren't a full bar away. I wasn't really worried about it so much. Now, when you first hit it, they most definitely were. But right up here doesn't really faze me. You want to do a little lesson on when the mid-band is more likely to hold? From a bad top, when it's not a no triggers through termination, the mid-band's more likely to create a bounce. Do you see how the large triggers remained a full bar away? The mid-band's more likely to create a bounce. When the large triggers don't follow, the mid-band wouldn't create a bounce. That's not a fair question. What would have been a better entry? Waiting for a pullback to an area inside of triggers with momentum and the potential to break? How's that? I don't see an entry on either of these. Unless you were just going to jump into the market and hope it kept going up, I don't see a rules-based entry. I don't see any pullbacks. That's the first one that I see right there. Does that make sense? The first time would have been, is that crude oil or S&P? That's S&P. The first time that I saw potential would have been right there. Does that make sense? It railed, not my money, but right there. Well, that's a pattern that I recognize. That's a pattern that I can prove works more than it doesn't. That's a pattern that I know where to put my stop, right? That's a pattern that gives me an advantage and an edge to get up to the next treble. Stop looking at the money. So here's the deal, and here's what happens. When you use hindsight to try to find entries, let me show you what you do. You start saying things like, yeah, I totally would have entered right there, below the mid-band, because that's where it started up. And I just would have held that trade to right there at that divergence, even though I didn't know about that divergence till 2.5 bars later. And you'll say, yeah, I didn't exit. I wouldn't have exited here, right? Even though every indicator is below, the large triggers haven't even rolled because, it went up. And because I know that it went up, I know that I wouldn't have taken profits here. And man, so hindsight's 2020. And I've seen people present in the room like that, where they're like, okay, you know what, Mark? I would have taken a long trade right here, even though none of the rules are met. And I would have exited right here, Mark, and that would have been, like a $3,000 trade because I'm such a badass. And then if you go back and say, well, where were the rules met? There were none. There were no rules met. And I've done it. I'm guilty of it. I am 100% guilty of it. And look what happened with the weakness, without the break, with the 3 divergences. Isn't that awesome? So Master B, there's no trend trade entry yet, right? Not yet. But here's where some people change their thought process. Well, with all of this momentum from the termination that held, some people say, well, if I have momentum and a clear path on my small chart below the fibs, right, maybe I'll try to take a shot because clearly they're not going up anymore. So your plan changes as you grow. But until you're consistent, why not let it be consistent? Until you're making money every day, why not focus on the best trades, the highest probability trades, the trades that are more likely to win than lose? So I have momentum, only 2 triggers through, and it is not a strong top that produced it. This is not my best look. The further away from this fib I get, the more my triggers get below it, the more likely it is to break. There we go. Now it's 3 triggers through. That's my good look for potential. Now I can take a shot if I want to take a shot. And it just keeps getting better, right? Now if I get a pullback to an area inside of triggers, I know 100% where my stop belongs. I know exactly what my risk is. But does everybody see that it's only potential? And that divergence is the biggest killer of the potential to break. Does that make sense? So if I look at my plan, watch this. If I look at the plan designed to optimize the chances of success for new users, and I put it up against this picture, I want you guys to see how simple trading can be as a brand new user. Oh man, have a good one, Cav. It's always great having you in here. So guys, one area not broken. So far, we can look for the trade. From a strong top or bottom. Guys, a strong top or bottom is defined as a no triggers through termination that reverses the market. A no triggers through termination that reverses the market. That's a strong top or bottom. Do you guys see how I don't have that? 3 out of 4 triggers got through that top, so that's a no. Odds favorable momentum, that's a yes. Smalls outside of the large on the 5-1, just barely. No divergence on the 5-1. So if I'm using the checklist designed to optimize my chances of success, does everybody see how I only have 50% of my advantages here? I've only got half of the good stuff. Now, it doesn't mean that the market won't continue down. What it means is that because of this divergence, because of that weak top, if you took 100 pictures of this trade, it's less likely to win. Because your KISS plan is designed to optimize your chances of success. That's it. And I don't know what's going to happen, guys. I don't know if this is going to win or lose. But until I have the reps and the wherewithal to say, well, maybe I'll take it if it gives me a down bar, right? I'll take it with confirmation because I can reduce my risk. Yeah. You know I give it out every day, right? Every day. But Master B, it's funny because most people don't grab it until they've been with me for a month or two. Most people don't latch onto it until they've been with me for a while. And it's just normal. I think it's ego. And I don't think ego is a bad thing. I think ego is it drives a lot of successful people. But there's a way for it to be easy and even easier. And guys, if you're brand new, Master B, let me know if you want this one. That's the high probability trend trade checklist that goes through strong top or bottom, that goes through odds favorable momentum, that goes through is it a termination, potential, or broken, and goes through to finding the perfect entry. And that's literally the checklist visual right there. So not only do you have the checklist, you have exactly what it looks like. And if you have that in front of you, maybe it saves you a little bit. There's Ron C. You're welcome. Guys, I promise you everything you need to be successful. Ron, nice to see you. Good morning. Paul was looking for you earlier. How's everything going with the hurricane? You guys good? Down on the beach? Apparently there's some inclement weather. Guys, I love this. Counter trend trade, white bar, really shouldn't work trade. How's that for a name? So glad I learned the high probability trend trade first. It gave me the ability to see these types of trades. Thanks, Nexgen. Complete dud, Ron. Good. That's not a bad thing. So check it out. Master B, remember we said with only the potential to break, divergence is a killer. Higher divergence is a killer. So Ron took that very basic, that very core, that very just, it's so generic and boring as all get out. And he said, so when I can't go short anymore, I recognize a pattern that I can go long. And this particular trade, in with a divergence, getting above stuff, it typically makes the reversal bar marker over here. And Ron says, well, with that look, I can make $110 per contract. And guys, it's a pirate trade. It's a counter trend trade. It looks like it goes against everything. But the reality is, this is a pattern that Ron can prove wins more than it loses. And this is a pattern that he began to recognize because of his study on the high probability trend trade. I hated this trade. If you don't get a reversal bar marker, that is something that you turn on. Absolutely, Master B. So, on your large chart, there's my reversal bar marker right there. In order to have that, let's go to indicators, and it's going to be the T3 Fibs Pro Trade Synthetic New. And right, you can look for that gold color. Reversal bar marker 1, show reversals. You can make it gold. Ron's is white. So you can change the color. We can make it match Ron's if we want. And then just hit apply and OK. And it'll put that reversal bar marker on there. Ron's blaming me for it, saying I helped perfect it. Guys, when you guys post pictures and ask questions, I give you everything I have. And Ron did that. Ron said, hey, I'm looking at this pattern. What do you think? And I gave my 2 cents. There we go. And now are you guys ready for the most depressing thing about being a new trader? I knew that was going to go down. Who says that? I knew it was going to go down. I mean, I had divergence. It wasn't a strong top. I knew it was going to go down. Really? The same way you knew that was going to go up, right? The same way you were certain that that was going to go down. It's the same freaking look. And it didn't. It failed, right? And with 2 triggers, hold on, and divergence, it failed. And with 2 triggers, well, with a termination, it failed. Hold on. And with 2 triggers, where is that, 955? And divergence, it failed. Hold on. Probably 2 triggers in the moment. Divergence, it failed. What did that one look like? It tried to fail, and with divergence, it did. So Master B and everybody in the room, 2 divergences. What is that, 448? There's your divergence, and it failed. So what was that? Was that like 7 of them and 1 of them worked? 7 of them and 1 of them worked. I suck at fractions, but I know that's not 70 or 80%, right? Let's find another potential to break that didn't. That would have been 2 triggers, and that one failed. And that was only 2 triggers, and that one failed. And that was 2 triggers, and that one failed. Holy shit, pardon my French. Guys, sometimes they're going to get away from you. But remember that trading is probabilities. Trading is doing the same thing because of the advantages. And guys, there's going to be a lot of times. Actually, there's probably not going to be that many. Terminations are going to cost you money more often than they provide you money. Only the potential to break is going to cost you money more than it provides you money. And you've got to remember this, guys. You've got to burn this picture in your head where 36 times you lost a trade because rule number 2 wasn't met. Because your brain is going to tell you, Master B and everybody in the room, F those rules, look at all the money you didn't make. And then you're going to take the next one with divergence. You're going to take the entry that's not inside of the triggers. Because you feel like the market owes you. You're gonna say, well, it's weak triggers, but it's 3 triggers through. It's not an area inside of triggers, but it is a mid-band. And you're gonna start to rationalize breaking your rules because of the one time your rules kept you out of a winning trade. Don't ask me how I know. I like it. We haven't done a lot of Ninja Trader, and I think it's important, right? Guys, now I have a termination. It's creating a reversal. Does everybody see how the large triggers are below the reversal bar marker? Which means that this mid-band is a termination condition. Give me a Y if that makes sense, Ninja Trader users. This is exactly what it looks like. This is the gap theory, 100%. Let's give you guys a picture. Whoa, that is huge. The mid-band is a termination, termination condition because the large triggers are a full bar away. There you go. Now you have it clearly defined. You know exactly what it looks like, and there's never any reason to trade directly into a termination condition, right? And they're still below, and we'll see what happens. But they're more likely to close the gap than they are to just rock it up. But who knows? They could just rock it up. Now they're into a fib and all the triggers are below. We'll see what happens. Jen, I guess that divergence high was going to hold. And look at that. If you were tempted to take the long, you never got a close on the correct side of the triggers until right here, which had you trading directly into trouble. Guys, rules will keep you out of so much nonsense. Jen, did you go short on the HVA? Because that was perfect. Termination, smalls below the large, pull back to the pink HVA with strong triggers. That's in one of the plans right from the website, guys. It's not in the brand new user plan because you do have to go counter trend to take it. That's a pretty outstanding short though. And now it's triggers up, right? Weak side of the triggers, no room to trouble. Not looking for a short trade. Don't have a long trade. Stupid market. Nothing yet, right? Relax. Triggers down, strong side of the triggers. Get my paper trading going. If I get a close below these small triggers, guys, isn't that a short trade? 3, 2, 1. Did not close below the small triggers. That's my spot. Let's see what the next bar does. We have a whole minute to think about it. I've got smalls down. I'm on the strong side of the smalls. I pulled back to an area. I just need a close on the correct side of the triggers. Does that make sense, everybody? I'm not giving my opinion on what I think the market's going to do. I am speaking out loud my checklist. This is my large chart read. This is what I have to see in order to take an attempt at a short trade. And I've got 23 seconds to think about it, guys. I've got 20 seconds to think about it. 17 seconds to think about it. I'm in no hurries. I got no rushes. I still have 11 seconds. Man, trading is not stressful. This is awesome. I'm transitioned now, right? I did pull back. 2, 1, not a close below the triggers. Not a close below the triggers. Not a down bar below the triggers. Not my trade yet. Now I got 50 seconds to think about it again. Does that make sense, guys? It's not what I want. It's what my rules say I need. And there they go, sons of bitches, without me. And that happens sometimes. It's another good example, guys. It's not always going to be your money. Termination, pushing. If you went long at the mid band, you're nervous. Still looks like river buoys. There's price sucking back to those large triggers. Pretty cool, right? Just patterns. Don't trade into a termination. You're likely to get run over. I love it. Trading is so mellow when you believe in your patterns. Trading is so relaxed when you understand your core advantages. So small chart terminations, big rat. Let's start at the base. Because I don't even look at my small chart. True story. I don't even look at my small chart until my large chart says go find an entry. So can we start with that? High probability trend trade, momentum and path on the large chart. What's going to keep me out of it? It's starting on the first trade. Are you good with that? I want to make sure that we're in there because there's more than one thing to talk about. But let's talk about the core, right? What was that? Let's talk about the basic. Let's talk about the one thing when life is perfect that will keep me out of a high probability trend trade. And that is, there's only one, big rat. There's only one for the new user. and it is 3 divergences in the same price range. 3 losses of momentum on a small chart may terminate a trend. So if my large chart has momentum, if my large chart has a clear path, and I go to look for an entry on my small chart, and the small chart shows me 3 divergences for a short trade. If my small chart shows me 3 divergences before a long trade, then 100%, absolutely, without question, I choose to not take that entry. So Big Rat, that's the one, the first one, right? And here's a great example. 3 divergences in the same price range is exactly where that market took a big nosedive. Now there's a lot of other examples, and I'm going to direct you to John Novak's video, and this video was put together to help with automation, with the automated system and managing it with a little bit of discretion. But taking profits at areas is one of the things. Well, let's not say that. Let's not say that. On the perfect trade, on the perfect high probability trend trade, I'm looking for room to trouble. And Big Rat, on your large chart, I'm just going to call you Big. On your large chart, you've got fibs from the 5-1, a 21-3, and the 13-2. And every one of those are important. So you'll see your 5-1 fib, which is exactly what this is, on the large chart, and that was your termination, and look what it did. But let me go back and let me find a quick picture for you. Large versus small. I know I have a picture here. One second. There we go. So this will happen sometimes, Rat, where the large chart is showing you that potential to break, but the small chart looks like a textbook termination. That's why the large chart defines termination conditions. That's why the large chart defines momentum, because those triggers will show you the potential to break, even if your small chart doesn't. And one of the things that'll happen as well, and this is a new user thing, this is so common, is my new users will, I'll show you some of the common things. When the large chart rules are met, when I've got my advantages on the large chart, everything says go. These one-to-ones don't phase me. These one-to-ones are probably giving me the bounce I need to get me back to my entry. Does that make sense? Because this chart is clear sailing. The small chart one-to-one is probably just enough to get me back to my entry. Another thing that new users do is if the small triggers turn against you on the small chart, it doesn't matter. Look at the momentum on the large chart. So knowing where the rules are met are huge. These two conditions on a small chart don't phase me. Don't phase me at all. It's going to take 3 divergences on the highest probability trend trade. Now, a reason not to enter a divergence on that potential to break trade is a reason. So if you start basic and you're focused on the highest probability trend trades, it's 3 divergences. And then the video that I have, just because it's not a termination condition, and let's see if we can find an example. So if this were momentum and clear path, a second higher divergence won't keep me out of a short, but it might take me out of a short. So it turns into a management thing. But as far as termination conditions, 3 divergences. That's the one. Does that make sense? I hate to say that anything doesn't matter because everything has value. You just have to make sure that it has value in the moment. That divergence, if it were a clear path, so watch this. If I take that fib off, and I'm going to cheat a little bit. There we go. With momentum and a clear path, that divergence doesn't freak me out. That trigger color change doesn't freak me out. This 1-to-1 looming in the distance doesn't freak me out. The only thing I'm focused on with this look is a pullback to an area inside of triggers. Yeah, I love questions like this. This is really what makes the classroom amazing because a lot of people wonder the same thing, and all it takes is one of you guys to ask. Just one person to say, hey, Mark, what about this? And guys, I'll give you everything that I have on any subject that you bring up. Andy V. Small triggers down. Strong. Didn't we see this one earlier? Entered after the close on the correct side. We're ready to manage, right? And major $400. Nicely done. Andy V, this looks exactly like the picture from earlier. In at 56. Had to manage at treble. Took it off at 54. 2 whole numbers, $400. Great trade. Great trade, Andy V. I think you gave me an old picture, though. Because I believe that's the same picture from yesterday afternoon. Oh, Dustin, that works. I'm going to write that down, Dustin. Thank you. I don't mind calling you Big Rat. I know a lot of people have gaming tags in here. I'll call you whatever you want to be called. Andy V, 3 triggers through. Pull back to the area inside of triggers. You get in a little bit late. 2 off, and then out on the 3rd with the weakness right at the fib. Great job, Andy. Great trade. Awesome trade. And this is your look, Andy. That's the look where those small triggers are so far away. I love getting in at the area, especially without divergence. I love using the area because it gives me time to get back to those triggers, to react, to get to break even. And I'm break even by the time that bar's done printing and I'm into trouble. And then if it comes back, I'm cool. I'll wait for the close on the correct side. And if it doesn't come back, it's just beautiful. What a great trade. Nicely done. It's going to be another great highlight reel from today. Going to be another great highlight reel. There we go. Small triggers down. Strong side. Room to the VWAP. Andy, perfect entry. Market comes down. You closed 380. Nice. Great entry. Great management. Make a little money. Take what I can. And you had it set for that VWAP. And what did it end up doing? It made that VWAP, didn't it, Andy? They did make the VWAP from the strong side. Looks like they did on mine. And that's where the bounce up came from. Did they not give you one more push down to it? Maybe the VWAP came up a little bit. 61.8. And that's where it ricocheted and bounced up. It did, didn't it? Strong side. That's where I'm a little more loose with management. Strong side. That's where, man, they got to hit something. they're more likely to hit something than not from the strong side of the triggers. And that's that little test before they get to trouble. The buyer saying, I wonder if anyone's going to fight us. And the seller say, nope, we were looking at the VWAP, we're going to the VWAP. And then when we get to the VWAP, we'll get the hell out, and buyers, you can come back at us. Does that make sense? You don't like waiting for it. That's okay. That's your right. That is your right. Andy, you made $160. Let me show you guys something. Just for grins. Andy, if you make $160 3 times a day, over 252 trading, that's not a bad year. Wouldn't you agree? One of the great things, and one of the things I admire about Ron C in this room, is he takes profits at $110. Every trade he takes is a $110 trade. And if you take $110 on the highest probability trade 5 times a day, right? That's it. $138,000. And what if you're so confident in your $110 quick shot trade that you do it on a 10 lot, right? And that's all you do once a day. Once a day, highest probability, all the momentum, nothing in the way, quick profits, right? And what if you take that and you mirror it on 5 accounts? Or you mirror it on 10 accounts, right? Guys, that's where it's made. Money isn't made from the $1,000 move. Money isn't made from the $1,500 home run. Money is made consistently, day in and day out. Consistent profits, having an advantage, taking your best shot. True story. When I was 8, story time, right? When I was 8, I played my first year of Little League. And that year, I couldn't hit very well. I was brand new. I was 8. Don't make fun of me. But I did hit a home run. I knocked one right over center field. And I couldn't for the life of me figure out why I wasn't at the top of the batting average sheet. I was down at the bottom. And I kept saying to myself, but I hit that one home run. How come I'm not higher up? I hit a home run. Home runs are amazing. And it was that year that I got a lesson in averages, that I got a lesson in the idea that it's not about the one shot. It's about the consistency. It's about getting on base. It's about hitting it into the gap, right? A single, a double. It's not one home run making you an amazing ball player. If you've never seen the movie Moneyball, go watch it. It's about that idea. And guys, there are so many parallels between that movie and an intelligent approach to day trading, without a doubt. I like this last hour, guys. I like all the live reads. I like talking about what our indicators are telling us. Check it out, Dustin. 3 divergences in the same price range. The last one was higher. Look what the market did. Pretty cool, right? Even on the big chart, those patterns, they work, guys. They really do.